State Bank of India numbers are out, and optically, if you just look at the profit numbers, you would believe that they are below estimates. They are below estimates, of course, but the asset quality is shown an improvement. It's a mixed bag of numbers, you would have to say, the reported numbers. Asset quality is improved. Provisions, YOY basis, I think, have gone down. Yeah. The bottom line numbers have looked a lot lower than what the estimates were. We'll get in experts in moments from now to talk about that. In fact, I'm told Lalitabh Srivastava of Sharekhan with us on the phone line. So let's get him in and we'll analyze the numbers along with him. Lalitabh, thanks for taking the time out. What's your initial take on the numbers?
Yeah, hi. Clearly, they were a surprise. But it seems that, bank has opted to go for, balance sheet cleanup. Because if you see, the provision number on a sequential basis has actually moved significantly to around 16,500 crores from around 6,000 crores last quarter. And simultaneously, you will also notice that, amount of gross NPAs and net NPAs have also moved down sequentially significantly. So I think, prima facie, it looks like the bank has gone for cleanup.
But if you take a look at it, even if you're looking at it sequentially, but from a year-on-year perspective, the provision numbers is like more than halved. Isn't that a positive?
See, on a year-on-year number, yes, they are much lesser. But then you will have to take that 1 year back situation was very, very different. This at this point of time, what we are seeing not only with this bank but several other banks as well, that we are seeing a peaking of NPA cycle. Incremental slippages are coming down. I do not have the incremental slippages for State Bank of India as of yet, but the trend that is being seen in other banks also, that incremental recognition is coming down, and which is why there is being seen improvement in asset quality. I think, so YOY numbers on provision front will not be very right to compare.
The other point being is, while we're talking about the gross and net NPA numbers improving sequentially, I think 3.01 was net NPA, gross NPA 7.5, 3.8, 0.71 earlier on. Just want to get in a sense from you as to what will be the crucial things that you're going to be watching out for. We know RCOM's already gone into the NPA basket. In terms of additions that we could look at from the ADAG group, Jet Airways and how they treat that, and the other sketchy accounts.
Yeah, see, some of the so-called troubled accounts, the management had discussed about last quarter. Now there were some recoveries or upgrades which they were expecting to happen in Q4. We would be looking out to know how that has panned out. 2 or 3 accounts in power segment as well as other infrastructure segment as well. Apart from that, we'll also like to see how the farm loan slippages have behaved this quarter. State Bank has so far demonstrated a very slim kind of SMA 1, SMA 2 total book. So hopefully there is not too much of an addition to that. So these are some of the things that qualitatively we would be looking out for.
All right. I think there are some exceptional quarters as well. They include some 500 odd crores that have come from partial investments for their subsidiary in the SBI General Insurance Company. There's been 1,000 crores on regards to a certain transfer with payment services.
Yeah, that's for the entire year, not necessarily for the quarter, if I'm not wrong.
And the provision coverage ratio has improved to about 78.73%.
Yeah, okay. Ravikant Anand Bhatt of India Nivesh also with us on the phone line. Ravikant, what have you made of the initial numbers?
So clearly, I mean, we were expecting 51.5 billion of net profit. The provisions seem to have knocked off, what all that we were expecting. and thus the significantly lower net profit. But if I were to look at the core earnings, though, so at the NII line, which there seemed to be a kind of one-off, which we had kind of penciled in. There's still the NII is on the lower side, but the other income has surprised quite positively, so it's quite strong, and the quarter was actually comparable to the fourth quarter of last year. So compared to that, the other income YOY is flat, and that is quite on the stronger side. So I'm guessing one of the line items, either in the fees or as far as the recoveries from return of accounts is concerned, has been exceptionally strong in the fourth quarter, due to which the other income has been on the higher side. And therefore, the operating income was slightly ahead of our expectation, but clearly it's the asset quality related provisions which has knocked off the operating profit, which was almost in line with our expectations.
The other bit is that the NII is lower. I mean, most of the other high CASA banks, corporate-facing banks, the NII number performance has not been muted. But in SBI's case, the NII performance is below estimates. And you got to wonder for how long will banks keep on saying that the worst is behind, especially in the NII front, when others have done this, but SBI has not been able to do so.
That's right. I think the other important factor would be what was the loan growth during the quarter. Ravikant, did you get a chance to look at the loan growth for the quarter gone by?
No, so I haven't yet looked at the loan growth number, but again, I mean, talking specifically about NII, one needs to take into consideration the fact that the gross NPA ratio is lower 1% QOQ. There's about 150 billion that have been knocked off from gross NPA. So clearly one needs to look whether there have been any interest reversals as far as the NII is concerned, due to which it's turned out to be on the weaker side vis-a-vis expectations.
And would a loan growth of number 12 or 13% look good to you?
It does look good, if that's the number.
Okay, we'll have to confirm that number. Stay on with us. We'll just go across to Shefali Malik, who tracks this space pretty closely to get the fine print of the numbers. Shefali, what are you tracking? What are the key takeaways as of now from the numbers?
Well, the numbers are clearly indicate that the pressure that has come on the bottom line is mainly because of the higher provisioning. So provisioning specifically for NPAs has inched up about 4,000 crore rupees on a sequential basis. And like one of the guests mentioned, that other income has surprised on the upside. So that was being expected, and it has come in at a very positive number of about 12,685 crore rupees, which is a growth of almost 4,000 crore rupees on a sequential basis. Q4 is generally a strong quarter from fee income point of view as well, so that might have played here. Also, in addition to that, the expectation was that the recoveries from the written off accounts would be really high this quarter, so we'll watch out for that when the management speaks. Other than that, the loan growth figure is about 13%, so that is a very good number, because the expectation was that they'll do something like 10-11%. So loan growth has also done pretty well. Deposits up 8%, so the business momentum for the bank has remained strong. Even operationally as well, they've done well. The operating profit has come in at 16,933 crore rupees, so it has inched up from on both YOY and on a sequential basis. Last time, the number in Q3, that is, there was some amount of pressure on the operating profit. So this time they've managed to do well as far as operational numbers are concerned. More details with regards to the asset quality would be needed, because gross NPAs and net NPAs, even though on a sequential basis they have come down, what kind of slippages, what kind of write-offs they have done in this quarter would be important to look at. For instance, if you look at ICICI Bank, they took very high write-off numbers in Q3. Whether they've also done the same, it will be interesting to see, and then only we'll understand the reason for the higher provisioning as well. Slippages, I understand, is about 7,900 crores, which is a very good number, because the street was factoring in around 8,000 to 10,000 crores, so it has come in on the lower side of that one. Other than that, if I look at the operating expenses, that has come in at about 10,477 versus about 11,000 on a sequential basis, and 9,200 on a YY basis. So even at the cost level, operating expenses level, they've actually managed to maintain control. So overall, I don't see too much of a problem on the first cut basis. More details would be needed on the breakup of the asset quality.
Okay, Shefali, maybe you have some questions as well, but just one quick question to Lalitab on the slippages. Lalitab, aging of NPAs, I presume, is another 500 crores, but otherwise slippages, I mean, about 8,000 odd crores, and 500 crores of this due to aging of NPAs. That number seems to be a bit better than what the street was working with.
Yes, even we were penciling in a little higher than that number. So it seems to be better than expected.
Deposit growth of 8%, that was what the street was penciling in, and that's what they've clocked in. I think my colleague spoke to you about the loan growth, and I think it's the number of 13% that Shefali just highlighted for us. So that is an encouraging number according to you?
Yeah, loan growth seems to be, encouraging.
All right. Okay. Shefali?
Well, I have a question for Ravikant. So, Ravikant, there was some amount of pressure that was being anticipated as far as their agri book is concerned. So, what do you have to say about that? You think that that will be a huge concern for them and for some of the other PSU banks as well?
So I think one should expect it in the commentary, but clearly going by the slippage number that you just now mentioned, it's clearly meaningfully below. So we were working with 105 billion of slippages, and it's turned out to be 20 billion lower than what we had expected. So this quarter at least has turned out to be far better. Now, what's happening is basically a certain cyclicality is kind of getting built into the NPA numbers as far as the agriculture slippages are concerned. So I think. You should ideally expect the commentary for the second quarter. I'm not very sure because now you will be heading into the onset of monsoon, and typically the issues one would expect related to repayment etc. to start after the harvest season. So not ideally 1Q won't be the ideal quarter wherein you are going to expect heightened agri slippages, but if there's going to be any commentary vis-a-vis loan waivers are concerned, which we heard only one particular management comment, that too with respect to Kerala. Otherwise, I think we are not really going to expect see much on that count. At least the slippages don't seem to suggest anything.
Lalita, I have a question for you. So basically the expectation was that the loan growth might be a bit accelerated for them this time, mainly led by retail and also because of the portfolio buyouts that they might have done. Going forward as well, you think that portfolio buyouts will constitute a large amount of their lending book?
Yes, I think that will be one viable strategy for the bank. Going forward, it will be interesting to see how the corporate credit demand picks up, because that has been fairly muted for last year. So that will be an additional thing that one would be looking at. On the overall side, we are moving in for the lean period from the agri demand side. So the outlook on credit growth will start becoming important from H2 onwards. But clearly, pick up in corporate credit and, as you said, the portfolio buyouts would be something that will be helpful.
So Lalita, do you think the deposits growth will match up, because there is a crunch of deposits at a systemic level? So do you think that PSU banks will find it even more tougher to garner more deposits?
I think you have rightly pointed out that the deposit and especially liabilities side is very, very intensely competitive as of now. My sense is that yes, PSU banks will have the problem on that, but not SBI. I think SBI can benefit to some extent at the cost of some of the other PSU banks.
All right, Lalita. So that's it from my side. Divina, Neeraj, would you have more questions for them?
All right, Shefali, thanks very much for that. I think we're pretty done with the dissection of the SBI numbers, but just getting a quick perspective on what happens to the stock here on. Lalita, thanks very much for joining in. I think I'll just toss that question over to Ravikant to see what his pecking order within the PSU banking space is going to be now, and if at all it's going to be PSUs versus privates.
So I think this binary will and this binary has actually become kind of a bit meaningless simply because PSU banks still don't have much of a hope from a performance perspective. And again, I mean, there's a whole lot of consolidation that's happening, and that's going to happen going forward. SBI has gone through that phase, and I think within the PSU space we are covering only SBI, and that's the only one which we like. both, I mean, from a franchise perspective as well as from a growth perspective. The balance sheet is very well funded. Liquidity coverage ratios being upwards of 130 or 140%, which they had reported in the last quarter. So sufficiently liquid balance sheet, loan growth picking up. You are going to see leverage kicking, and with let's hope, I mean, with the asset quality issues more or less taken care of, you are going to see a better expansion as far as earnings are concerned. So, I mean, this continues to remain our pick amongst the PSU banks, but within the corporate banking space, it's the ICICI Bank which we would prefer SBI.
Okay, we leave it at that, Ravikant. Thanks so much for taking the time out and being with us as well. So that's essentially the take on State Bank of India. A mixed bag of numbers, slippage is lower. The stock is flat because it's mixed bag. Asset quality and slippages have improved. Provisions okay, but the NII growth a bit of a concern. Most of the banks in that bracket would essentially have done reasonably well on the NII front. SBI's had its issue on the NII this quarter around. Let's wait and watch what happens during the course of the next few quarters. The stock lying absolutely flat. Moving focus to the global arena as well, because the globe is an interesting place too. Remember, we've recovered a bit of lost ground and banks are still trading higher, but the world markets were a very volatile place throughout the trading day today. US has hiked tariffs on China. There's some pushback from Iran with regards to the relationships that they have with US imposing those tariffs. Add to that all that's happening on the trade front. So important to get a view from Alastair Newton of Alavan Business Advisory. He joins us right now on the show. Alastair, good having you. Thanks much for joining in and thanks for being patient with us. We were talking about the results of one of the largest banks in India, so couldn't come to you earlier. Having said that, what's your sense of how the world markets are shaping up in light of US raising tariffs on China?
Well, clearly we've seen a lot of action in equity markets worldwide already this week. I think so far today, the reaction has been relatively muted. But I think also investors are waiting to see what China does by way of inevitable retaliation.
They have said they will. So with an assumption that China is going to go out and take a retaliatory action, do you think the markets are pricing that in already? Because there's some bit of nervousness in the last few days in equity markets worldwide. I mean, the Asian markets have fallen a lot more than the US markets, but the US markets too have come off in anticipating these moves.
I think basically nothing gets priced in until it has happened. So having said that, of course, things could go the other way. You'll no doubt recall that yesterday evening, Mr. Trump announced that he had had a beautiful letter, close quotes, from Xi Jinping. Xi Jinping is actually very good at handling Donald Trump, knows how to play to his ego. And it actually wouldn't surprise me at all if we still got a deal even in the next 2 or 3 days.
Okay. Interesting. You are saying that we might get a deal despite that US has hiked tariffs and China is saying that they will put in retaliatory tariffs.
Yeah, I think it's quite plausible. I think Donald Trump is playing his usual negotiating game. He wants to take personal credit for the outcome of these negotiations. He wants a deal. China wants a deal. It is, in my view, very likely that we will ultimately get a deal. Now, whether it's this weekend or a week in the future or whatever remains to be seen. But I think so far, a lot of investors are still assuming that there is going to be a deal either now or in the not too distant future.
Okay. In which case, Alastair, would you believe that market participants by and large could also be thinking along those possibilities? Because as I said, while we've corrected in the run up to this event, the news today has not brought about any jitters in equity markets worldwide. Could it be the anticipation that, yes, the news is out of the way, but maybe some resolution could be reached soon?
I think investors are still betting on a resolution. Okay. And in my book, they are right to do so. The question is when, not if.
Okay.
Keep in mind, too, that the tariffs which the US, sorry, if I can finish, the tariffs the US announced last night, they do not come into effect on any goods which are already on the high seas. So there is a 3-week delay, in fact, before we see tariffs on goods entering the US.
Okay, point well taken. Alastair, you follow geopolitics very closely. I'm guessing you follow politics too. You would be looking very keenly at what the developments in India are shaping up to be. What have you made sitting out there about the elections thus far? Because I see a lot of local brokerages now starting to turn a bit edgy with regards to the election outcome from India. Are you hearing anything? Are you observing anything which makes you take notice?
Well, nothing which makes me change my mind about this election, which is that it's going to be very close indeed. But I still think personally that we are going to see Prime Minister Modi re-elected, returned as Prime Minister, with a significantly reduced majority for sure, and probably having to go into coalition with other parties. I think the security situation has played very much to his advantage. I think the government's handling of last week's storm was a positive for him. The economy is a mixed blessing. Some of it, aspects of it are good, some are less good, as you know. And certainly in rural areas, the BJP is going to struggle, including in its Hindu heartlands in the north. But I still think that it would be wrong to underestimate Narendra Modi. I don't think we're going to see a repeat of 2004.
Okay. Alastair, would that be viewed poorly by the markets? How do you think, you've looked at India for long, how do you think the Indian markets would react or foreign investors would react on either of the outcomes?
Well, I think overall foreign investors are betting on the return of Narendra Modi at the moment. If we do get a surprise, if we do get a rerun of 2004, then I do think you're going to see a sell-off in Indian equity markets, at least by overseas investors. Some of my friends in India are actually saying to me that they don't think there will be a big domestic sell-off. I really don't have an expert view on that. You have plenty of people you can talk to about that, and you'll have your own view. But I certainly think overseas investors would see a Congress-led government as being a negative for the Indian stock market.
Okay. What's your view on the EMs by and large, Alastair? There's a lot of talk about how the Asia-based emerging markets are by and large neither looking expensive nor looking cheap, but in light of all the retaliatory tariffs and the action that we have, it's best to stay on the sidelines. What would your thoughts be?
Well, for sure. I think there's two things to take into account at the moment. The first is the one you've mentioned, which is the risk of an escalating trade war, which clearly would have a very big impact on supply chain countries around Asia as a whole. The second is the oil price. For net energy importers such as India, further tensions in the Gulf, possibly a flare-up of some sort between the US and Iran, would certainly push the oil price significantly higher than it is at the moment. I have to say that typically of the investment community, they're really only focusing on one big issue at a time, and that big issue today is US-China. They're not paying sufficient attention to events in the Gulf, as is witnessed by the price of Brent crude this morning. And we could see a big surprise there. If we see Brent go back to 80 or even higher, then that clearly is going to be bad news for the global economy generally, bad news for stock markets, and particularly bad news for economies such as India, which are highly dependent on oil imports. And let's also keep in mind that even absent that, if the US were to impose sanctions on India for continuing to buy Iranian oil, which I believe India will continue to do, that too is going to be bad news for sentiment over the Indian market.
Okay, and actually I was going to end my conversation with you on the topic of oil as well. It's a moving piece, and while Saudi Arabia has offered to fill up the losses in the near term, I think up till June if I'm not wrong, but what do you think is the near term or the medium term trajectory for what crude prices do? Because almost everybody was anticipating or of the belief that we will not cross the 75 to the 80 mark, because then the shale production and other added production, etc., will all come into effect, because this was a supply side driven rally and not a demand led rally. Would you be of the same opinion?
Well, I've got two caveats on that. It's a reasonable scenario, but the two caveats are as follows. First of all, if we get a trade war, the oil price is going down. Let's be clear about that. If we don't get a deal between the US and China, If we get escalating tariffication of goods, then that's going to be a big hit for the global economy. Oil price will come down. Secondly, on the question of shale and $75 a barrel, $80 a barrel, fine up to a point, but what the world is short of today is heavy crude. Venezuela being one of the major sources of that, and that problems there are well documented. We could still see the oil price going up further beyond 75, simply because shale cannot fill the gap in the market demand for heavy crude, being extremely light crude. So we need to look at the grades of oil prices as well as sheer volume globally.
Okay, Alastair, we'll leave it at that. Thank you so much for joining us today, and thanks so much for being patient with us while we were talking about some numbers.
Thank you.
All
okay,
right.
Bye for now.
Bye. That's Alastair Newton. Sanguine about the prospects of the Indian markets for sure.
Yep, and I think the domestic investors will be waiting for the results on 23rd, and let's see, because we're not getting any direction as of now, since we've seen that correction in the last 6 to 7 trading session. And I think Tata Steel is in focus. The stock's the top loser on Nifty after some reports indicated that the JV with ThyssenKrupp may not take place. Let's get some more details coming in from this development. Nikki Mirchandani joins us with more details. Remember, the market was keenly watching out for this, Nikki, because I think Tata Steel was looking to transfer some of its debt to this JV with ThyssenKrupp.
Yeah, you're right on that. Well, there were also synergies apart from the debt, and I'll start with the basic news first, with Reuters quoted that suggested that ThyssenKrupp is now not expecting the joint venture with Tata Steel, and this has raised potentially questions over the synergy benefits over 400 to 500 million euros that the Indian company was expected to realize. The Reuters report has suggested that they no longer plan to split the industrial and material division, which is one of the resolution that Tata Steel and ThyssenKrupp apparently in their comprehensive package suggested to European Commission, and instead of that they would be listing an elevator operational business. This was a development which was also confirmed by Bloomberg, which suggested that ThyssenKrupp will now be going with plan B, which could be in terms of listing the elevator business and having a separate structure altogether. This typically doesn't augur well for Tata Steel as a whole, as we know that it's going to also transfer some of its debt to the tune of around 2.5 billion euros of debt was supposed to go in this entity, and the synergy benefit, as we just pointed out, was to the extent of around 400 to 500 million dollars. What CLSA typically has to say about this failure of the deal, if potentially that could happen, because we're yet not sure if that's happened, given that the outcome of this deal is expected to happen only in the second week of June. So by then we would await a clarity, but just in case if these reports come out to be true, then CLSA says that this deal was important to Tata Steel because it was looking to reduce its European exposure, typically because the business has also not been doing that well. The proposed JV was expected to drive cost synergies, allowing Tata Steel to focus on its Indian operation, which is doing now well, where it has been slowing in expanding capacity. Apart from that, Phillip Capital in its report suggested that they estimate an impact of around 25 rupees per share if the company fails to form a JV with ThyssenKrupp. Motilal Oswal has a different viewpoint here. It does not see any change in the economical value of Tata Steel, but at the same time does not rule out any derating on the company if at all the deal doesn't fructify. Back to you guys.
Right, Nikki, thanks very much for that. Tata Steel obviously is bearing the brunt of it, and the stock has been down since the time we saw the news break out. 5.5% down for Tata Steel at 490. Infrastructure and capital goods behemoth Larsen & Toubro is expected to post a stable set of numbers today, while the company is poised to meet its order flow guidance for the year. Revenue may still be behind target. Darshan Mehta is standing by with what the street is anticipating. Darshan.
Yeah, so 8% top line growth is something that we're seeing, 7% on the bottom line and close to an 11% margin growth means slight improvement as far as the operation margins is concerned. But more important, it will be what the outlook that the management has given, because it's very clear that the company probably will meet the order inflow guidance. They had guided for a 10 to 12% order inflow guidance, and on the revenue front, they had guided for 12 to 15%. Now, as per the calculations, what we've done, they need order inflow of anywhere between 47 47,900 to 50,900 to meet the order inflow guidance. They've stopped giving individual orders, so they've given ranges, and that is what it seems. If you take the midway of this, it'll be close to 56,000 crores, which means the order inflow will be met by L&T this time around. The other part is the revenue front. L&T needs revenues of anywhere between 38,170 crores to 41,770 crores to meet the 12 to 15% guidance that they have, and that is something that we need to watch out for. Mainly, if you're looking at the orders and the revenues, it will be the infrastructure, hydrocarbon and building division which will lead the revenues for the company. Execution will be strong on the back of order mix, and finally, softer commodity prices will aid the margins for the company.
Okay, we'll watch out for this. Thanks a lot for that, Darshan. Eicher Motors is the other one which will report numbers, may report subdued revenue growth due to lower volumes, but the automaker could have recouped some losses through price hikes. Will that be sufficient to protect the bottom line? Yatin has the answer. Yatin.
Neeraj, like the other auto companies, we have seen Eicher also see a decline in the fourth quarter overall volumes. In fact, Royal Enfield volumes for the fourth quarter were down 14% for them. Probably that is the reason why we are looking at a 4% decline, which is expected in the fourth quarter as far as top line is concerned. EBITDA and profits are expected to fall by a hefty double digit, given the fact that the margin contraction will be there on the back of negative operating leverage impact. If you look at the absolute profit, we are expecting it to be close to 555 crores, a decline of 15% there. Margins also are seen contracting for the consolidated business. Consolidated margins are seen at 29.2% versus a level of 31.5%, which is the level year ago. As far as other factors are concerned to watch out for, apart from the earnings, will be the management commentary on the demand trends. What is the basic understanding as far as South markets are concerned, because we have seen demand slowdown happen there. What exactly are the Interceptor Twins, which is basically the 650cc motorcycles of Royal Enfield, which are looking at good demand traction. What exactly is the order book there? And of course, as far as 500 and 350cc are concerned, what exactly are the demand trends as far as these premium bikes are concerned?
All right, Yatin, thanks a lot for bringing that preview for us. Let's see how the numbers pan out. I just want to pull up the stock of State Bank of India. The numbers came out a while back, and the management will be briefing the press on back of the numbers, but the stocks moved in the green. Remember, going into the numbers, the stock was down about 4 to 5% this week, and the numbers are looking better than what the street was expecting, at least on the asset quality front, and also the loan growth, which has outpaced the deposit growth for the quarter, about 13% in deposit growth, somewhere about 8%. So some bit of recovery definitely seen for State Bank of India. Keep an eye on this one. But besides that, what's dragging the index lower today is HCL Technologies, which saw its profit drop in the last quarter. In fact, the street had factored that the overall numbers would be in line, but if you look at the guidance, actually what they've given going ahead, about 14 to 16% revenue growth in the current fiscal year, the margins to be around 100 bips lower. That's the guidance coming in. Agam Vakil caught up with the CEO of the company. Listen in.
We guided the street for 9.5 to 11.5. We exceeded the top end of the guidance in terms of revenue. This quarter has been extremely good, 3.3% constant currency growth, on top of a 5.6% in the last quarter. Right. And our all the new services, new generation services, which is our Mode 2, that's grown over 28% year on year. Right. So all the investments that we've made in building capabilities and competencies has really is showing great results. And that's the reason you see our bookings have gone up. This quarter marks the third peak in terms of booking. This year we hit 3 peaks in terms of total bookings. So all of that is what is giving us confidence to guide for a 14 to 16%. And when you talk specifically to the IBM deal, we expect it to get consummated by the end of this month or maybe 1st of June. And we have baked in that in our projections. Right. Of the 14 to 16, 7 to 9% will be organic growth, and another 7% will be inorganic, which includes the IBM deal and the flow-through impact of some of the acquisitions that we've done in the past.
All right, this is management at HCL Tech talking about the numbers, but one more set of numbers that got delivered is Indian Overseas Bank, and that has narrowed its net loss for the fourth quarter. Asset quality too has seen a sharp improvement compared to the last quarter. Let's discuss the quarter gone by with Mr. R. Subramanian Kumar, the MD and CEO of Indian Overseas Bank. So thanks very much for taking out the time. Put the quarter gone by into perspective for us.
Thank you very much. And in fact, the quarter has gone up the way we have been planning it for the last 2 years. It is, I said at the beginning of the year that it is going to be a turnaround year for the bank. The first thing what we focused was in respect to the operating profit maximization. We were able to make an operating profit of 5,034 crores, which is the highest in the history of Indian Overseas Bank, which was 38.71% higher than the last year. And another very important milestone which we achieved during this period is management or rebalancing our liability and assets. And CASA has been all-time high with 38.30%. And the asset side, if you look at it, RAM, that is a retail, agriculture and MSME all put together, they constitute 67.2% of my total credit portfolio, which is around 1.51 trillion. And my corporate book, 50% of the corporate book has been moved to A+ and above, the graded external rated accounts. Very important thing what we were able to achieve this time is a reduction of the gross NPA by 331 bips over the last year. And we are now at 33,398 with the 21.97%, which was around 25% earlier. And net NPA has drastically reduced by 452 bips, which is at present is 14,368 with 10.81%. And my provision coverage ratio has peaked. It is at 71.39% with an increase of 11.94% over last year. When I come to my the profitability numbers, I can say that my net loss has reduced by 40.66% over last year. However, this particular number is mainly because of the provision. We need to make a provision in respect of our, we fast-forwarded some of our NPA provisions, which would have become aged over the next couple of years, but we absorbed it this quarter. Another important thing which has happened in respect of our profitability number is that our expenditure on staff and expenditure general has reduced drastically. Our staff expenses come down by 11.60%. Our overall expenses reduced by 7.32%. These are the contributing factors which ensure that we are able to clock around 2.08% as my net interest margin. Going forward, this year we are pretty confident that we will be in a position to make a black balance sheet starting from the first quarter itself. That's what we are working on. And FY20 is going to be a year of reckoning as far as Indian Overseas Bank is concerned. It is based on 4-5 on the committed activities which we have initiated. One is in respect of the slippages. If you look at the slippages for the last 4 quarters, it was somewhere around 1,900 in the Q1 of last year. It dropped to 1,700 in Q2 of last year. And it dropped to 883, around 900 crores in Q3. That's a fresh slippage. And only in Q4, we had to recognize on 1402. We have made 1,000 crores of ILFS as an NPA, and we have provided accordingly as per IRAC norms. And one account just suddenly slipped, and we had to make it as that account accounted for around full provision, 100% provision because loss asset has been declared. So these two account itself contributed around 1,000 plus 750, around 1,750 crores as a total slippage in last year.
Okay.
The entire year, if you look at it, the slippage is only 6,000 crores.
Okay. Mr. Kumar, just can you also come in a little bit more in terms of the deposits and the focus now? Are you consciously reducing your concentration on bulk and high-cost deposits versus some of the retail deposits?
Absolutely, madam. The thing is, what I can say is, you look at my total deposit portfolio, it was peaked around 2.22 trillion, that is 2,22,000. I have not reduced the total deposit at all. It is still hovering around 2.17 trillion. But what we did was, we shirked our entire high-cost deposit. At one point of time, we were having around 82,000 crores as my high-cost deposit. Now I just have 168 crores because of its maturity period. All the high-cost deposit has been shirked. Second, what we did was, we went in for the retail deposit. What I mean by retail deposit is, a year before it was less than 1 crore, now it is less than 2 crores. that we wanted to clock more than 1 lakh crore, which we were able to achieve during this particular period. So whatever we lost in terms of bulk, we were able to compensate by inducting around 2 million customers fresh into our fold, and this increased my retail term deposit. The major change has come in respect of my savings fund, which increased from 66,000 crores to that of around 77 to 80,000 crore, 76,000 crore to be very precise. My CASA is at 85,227. Yes. There is an increase in the CASA by 6.96% over last year. But my CASA ratio today is 38.30, which is very high. Sure. So this composition has enabled us to reduce my cost of deposit from 7.3 to 5.39. Okay. Last year it was 5.49. This year it is 5.39. So we are constantly working out. Maybe in another 5-10 bips we will be able to further reduce by increasing my CASA. Yeah. We are planning to increase the CASA to 40+% during this year. Sure. And for which we are introduced not only new products, new services, and new digital products. In fact, I might say that we got the Excellence Award from the EASE for deepening of the financial inclusion digitalization, and for Excellence Award for the reforms which we undertook. So this we feel that the deposit is well under control and it is moving in the right direction.
All right. Mr. Kumar, just one quick question, and that it's with regards to... All right. I'm sorry, we'll have to leave it at that, Mr. Kumar, because we've got the SBI top team ready to address the media on the back of their numbers. But thank you so very much and congratulations on a good set of numbers. They will be starting to address, that's Mr. Rajnish Kumar. He's getting set to start talking to the press. The numbers there, decent set of numbers, at least from the asset quality side. There has been an improvement on the gross NPA as well as the net NPA side. You've got a healthy loan book growth of about 13%. The only disappointment there has been with regards to the net profit numbers. NIIs has come in a tad bit lower, but remember, they've taken a hefty provisioning this time around as well. So that is probably the reason why you were seeing the bottom line getting impacted the way it has. Gross slippages, however, at the lower end, 8,000, 10,000 was the street expectation, somewhere around 7,900 is the gross slippage for SBI. So that probably also another silver lining. There's another income component which has worked in their benefit this time, like Shefali had highlighted, about 685 crores odd. But the management there getting ready, I think we should be able to cut across at any time. The stock, though, I should pull up the stock to see what that one's doing right now. Remember, from the PSU banking space, this is probably the only one that you can put a finger on. If at all there is an investment stance to be taken, and with all our conversations across the board, with all the market participants, SBI is the one that probably stands out. 1.24% higher. Saw that initial dip when the first print of profit came out, but as the markets digested the internals, digested the improvement of the asset quality, that's when the stock started moving up yet again. So the top brass there getting ready to address the press.
Well, let's wait and watch how it does. I presume because the slippage is slipping a bit, this has happened. Okay, he's starting. Let's cut across.
Yeah. Good afternoon to all of you. If you recall, last year I had said that this year will be year of hope. So we have lived to that expectation. Bank has delivered a very good, or rather excellent performance on all parameters. The turnaround has happened. This year we have earned a profit of 862 crore, whereas last year it was negative by almost 7,000 crore. What is to be noted, and this is your always a favorite subject, is about the asset quality and the credit costs and slippages. The improvement in asset quality is very, very visible. Gross NPAs and net NPAs are substantially down. Gross NPA from 10.91 to 7.53%, and net NPA is now just 3.01%. The provision coverage ratio, it is 79%. This shows that the balance sheet of the bank has been fully repaired. Going forward, the impact or the shadow of the past will not be there on the earnings of the bank. The recovery during the year, these are hard cash recoveries or upgradations, 37,000 crore, which is all-time high. And out of this, 13,836 crore came through the IBC process. NCLT 1, the provision coverage ratio is 99%. All the three major accounts, which are in very advanced stage of resolution, we have made 100% provision. All these three accounts, SR Steel, Alok Industries, Bhushan Power and Steel. And as a result, almost 16,000 crore is what is recoverable as soon as the judicial process is over, which is which shows that the strength of the balance sheet as we speak. About the corporate loans, the provision coverage ratio, it is, if we take into account the written off accounts, OCA, what we call, it is 83%. If we exclude OCA, it is 70.60%. In fact, as on 31st March 2019, the net NPA in corporate book is just 34,000 crore. The slippage ratio, it is 1.60 for the year. And if we look at the slippage ratio for the second half year, H2, it is just 1.16%. The credit cost, which you see, 2.66%, for the fresh slippages, the credit cost is just 0.52. So what does it indicate? That the profits which bank has earned during the year, rather than going for the temptation to declare any higher net profit, the bank has spent or kept all that money to provide. And the statement which I made, that we have not left anything for future. Now whatever happens, the legacy cost or the legacy credit cost, whatever is remaining, by March 20, it will be done. From 1st April 2020, there will be no legacy cost as far as the corporate is concerned. Retail is a separate thing. And SMA 1 and 2, as at the end of December, the SMA 1 and 2 was 17,000 crore, but now, as on 31st March 2019, it is just 7,000 crore. So it is not only the reduction in actual NPA, enhancement in provision coverage ratio, but in terms of the asset quality in future, SMA 1 and 2 is a good indicator, and that itself shows that the overall asset quality, there is an improvement. In terms of capital adequacy, our CET1 is 9.62, which is well above the regulatory requirement. And this has come mainly through the focus on managing the credit risk-weighted assets. That's how we have been able to grow. And at the same time, we have not raised any capital during the year excepting 81. And we are able to meet the benchmarks. This again shows that now a lot of emphasis is being and a lot of attention is being paid to the managing the balance sheet in such a manner that any asset which guzzles the capital, so we are not going for those assets. There is a more focus on the what we call risk-weighted assets, and this is how we are managing our capital adequacy. So this is all about numbers, but some of the strategic initiatives also I would like to touch upon that in the past 12 months, tremendous amount of work has been done to improve the risk management system in the bank, which includes reorganization of various departments, creation of credit review department, because that is where most of our risk was coming in. The compliance functions have been strengthened, and the changes are all encompassing. These are at policy level. We have completely rewritten our loan policy. We have rewritten sector-specific loan policies, processes have been revamped, technology, it is being used in a big way for identification of early signs of stress, post-sanction monitoring. We have employed new tools even to check any diversion of funds, and the skill development, which is so critical for the banking industry. The entire shift in the way we train our people, as well as the access to the market for getting the required skills if they are not available in-house. And as far as digital goes, there is a clearly SBI has established and emerged as a leader. I don't think that there is any competitor who is close to SBI as far as the digital is concerned. YONO has been a great success, but that is what you see only in the front end. But this is an all-encompassing application which is being rolled out in the branches also. So it is an omni-channel thing, and it will bring in, we believe, huge efficiency gains for the bank. Only one process, which was around account opening, which used to take 40 minutes, very cumbersome. Today, if you go to any of the branch, you can set up an account in 10 to 12 minutes, paperless. This is just one example. When the full rollout happens, then that impact on the cost efficiencies and revenue enhancement in next 1 to 2 years, the impact will be very visible. There has been a huge attention in terms of the customer service. The customer service is delivered at our branches. Now almost 80 to 85% of SBI branches are modern. The staff engagement program, where one of the most, in terms of scale, almost 250,000 people have been covered under what we call Nai Disha, and the response has been very encouraging, and the next phase of this program will now begin. And another remarkable thing which I would like to mention here, that as we speak, all the internal promotions in the bank, starting from scale 1 to the top management, DMD level, they all have been done. So all the promotion results are out, bank results are out in next 10 days or 15 days. All the new promotees, they move into their new positions, and Q1, which is generally supposed to be that it is a dull quarter, will not be a dull quarter this time. It will be action from day 1. What are we going to do in the next 12 months? Having set the agenda, most of the things will continue what we are doing. But in a big way, this year, banks' focus is shifting to data analytics in a big way, to prevent frauds, to improve the credit quality in the small value loans. By and large, for the SMEs, 10 lakh and above loans, plus corporate credit, a lot of steps I have enumerated have been taken to fix the credit quality issues. Now, for loans below 10 lakh, in absolute terms, they are not a cause of worry for a bank like State Bank of India. But still, in percentage terms also, we want to improve the performance, and that is possible when we use the data analytics in a big way to improve the underwriting of these small value loans and make the process also very simple, where anybody can avail a loan in a very quick time and paperless. In P segment, we have already achieved a success. Through YONO application, pre-approved personal loan, already we have built a book of 3,800 crore and no delinquencies. So that is the power of the digital and the mobile banking and the data analytics. This is just one example. The cost to income ratio, already now, if I look at the quarter, not at the average, we are at 52.5% for the fourth quarter. And in this year, definitely we will be below 50. And by March 21, we should be around 45%. But I won't be surprised that if we achieve the benchmark of 45%, even earlier to that. And if we have fixed the revenue side through the growth and improvement in yield on advances, if we have fixed the liability side, where you will see that the cost of deposits, it has now come down from 5.3 to 5.1%. And maybe it will go down further because we have changed some rate of interest on savings bank. And the credit costs having been taken care of, and there is a sufficient now cushion available to absorb any shock. Plus, employee costs last year, they were elevated because they were elevated not on account of the normal wage bill, but because of the they were elevated not because of the normal cost, but because of the provisions which we had to make on account of gratuity, on account of provisions for terminal benefits plus wage revision. Overheads are under control and will remain under control. So this is a broad picture where we are very close to what I call the state of equilibrium, where the growth in terms of the credit growth, last year it was average 12%, domestic and international both taken together. It should be around 12%. Credit costs for the fresh credit or the fresh slippages will remain below 1. The ROA, we had set a target of 1% for March 21, but I am a bit optimistic that we will be able to advance it to FY20. But certain macroeconomic factors and all those things we have to take into consideration. So in essence, what can be summarized that whatever is the vision for the bank that was set, we are on course and there is no looking back hereafter. So these are my opening comments, and then whatever questions, one by one.
Hello. Yeah, just two questions at max, please.
So you sound extremely confident about the year coming ahead. You said all the pain is in the past now. Could you give us a sense, where things will go, especially in the asset quality front from here, and what gives you the confidence, and what are the kind of recoveries that you're expecting, especially now with the Feb 12 circular also out of the way? I do understand IBC, of course, remains a route that is open to banks.
No, if you look at what has been the fresh slippages in this year, it is just 1.6%, right? And the fresh slippages will remain below that for the year also. The bank's now loan book is 23 lakh crore. And if it becomes, say, by March 20, 25.5 lakh crore, so you can calculate that how much is 1.5 or below 1.6%, which is a worst case scenario. Let me say. It is a worst case scenario that it can be 1.5. In the normal case scenario, it may be around 1.16, which is the H2 number, 1.16. And if you look at SMA 1 and 2 of 7,000 crore, so that gives me the confidence that we will be where we are targeting.
So your outlook on recoveries?
Recoveries, we have already done 38,000 crore. I already mentioned that 16,000 crore is lying in our right pockets, which is NCLT, these three accounts. They can happen any time. I will not make a guess because every time we believe that in this quarter it will come, in this quarter it will come. But in that hope, the calendar year has passed. So But this time I'm very confident that this calendar year we will recover that.
So sorry, if I
please let others ask. So
sorry,
please.
one last question, sir. Non-core asset sales, that's something you didn't touch upon in your presentation. Any non-core asset sale plans for the year? That's all.
Non-core assets, one is that they are not as significant, right? But if you ask me about that, about the listing of a few subsidiaries, and in fact I should have mentioned, which I missed in my opening remarks, is that all the subsidiaries of the bank, they are doing exceedingly well, both in terms of growth and the return on equity which they are generating. And two subsidiaries are definitely on our radar for listing this year, which is SBI Cards and SBI General. And the feelers are that they will get very good valuations.
Vishwanath, if you can introduce yourself for the benefit of all in present in the room.
Vishwanath, I'm from Bloomberg Quint. Just wanted to ask you a question. You know, a lot of your private sector peers are moving away from the corporate lending space. They're saying they're finding retail and SME to be more, likely to fit their risk adjustment returns. As far as SBI is concerned, is there any shift in strategy for future lending for this year's lending? And secondly, in your corporate slippages, you've mentioned about 1,200 crore worth of loans from the aviation sector. Is that the one account that we're all thinking of?
That is your, I don't have any other aviation sector exposure, so you can guess whatever you want to.
But about the strategy on lending, sir?
So lending side, there has been a shift in the bank also. And the loan book of State Bank of India and the loan book of any other bank is not comparable. But the retail, which includes agri and SME in our case, so the ratio is now 58-42. 58% is retail, 42% is corporate. As you have said that because NBFCs are in retreat, so there is a huge opportunity in retail. Many banks and private sectors banks, if they retreat from corporate, so this will also create opportunities for the bank. So that way I always say that we have never been in a sweet spot like this as far as the competition is concerned. We have everything with us today. We have the capability to underwrite loans. We have capability to monitor these loans. We have the capital, we have the funding, we have the liquidity. So the approach will be that there will not be much of a change in this portfolio mix. And as far as corporate credit is concerned, if you look at our past year's number, and which I mentioned earlier, the credit risk weighted assets are not going up in a very significant manner. So there will be growth, but growth with focus on the quality as far as the corporate credit is concerned. But we will not miss the opportunity to grow because we are capable of growing and managing the risk.
So,
Ishita.
Hi, I'm Ishita from ET Now. So your slippages in Q4 were almost 7,500 crores. So can you give us some sense on which all sectors contributed to the slippages? And also, which are the area of concerns, the sector-specific concerns, like bankers are right now concerned about the auto and the real estate sector. So is that your view also, if you could give us some sense on that?
So out of 7,500 crore, only 2,200 crore is corporate, in which one aviation sector account is also included. And rest is all retail, and retail is only agri and SE.
2092 SME, agri 2592.
So we can't hear you.
Yeah. SME is 2092, agri is 2592, and personal retail is 537. 537.
Is, I think, of the best quality. Be it home loan, express credit, whatever auto loans. Agri SME, we are also seeing that there is some improvement. And agriculture now, like elections are coming to close. So I am hoping that the coming year will be much better as far as the agri NPAs are concerned. All the debt waivers have already been happened, announced, taken care of. And I don't think there is any election on horizon very soon. So That way, there should be an improvement on the agri front also. And the way to look at it is that the now retail loan book of the bank is about 11 lakh crore. And because we have an element of agriculture, SME, all the government-sponsored schemes, so it will be fair to assume that anywhere between 1.7 to 1.8 would be the fresh slippages. And that is, we are taking care into the system and accounting for it, and we are comfortable with that. But I have already mentioned that even in these small loans, a lot of work is going to be done to further bring down the slippages and improve the credit quality. The key or the success on the asset quality front will still be that we have to be very watchful about our corporate loan book. The whole problem came from the corporate loan book.
Are you specifically worried about the auto and the real estate sector?
Not really. Because one, we are not overexposed as far as the real estate sector is concerned. Bank has been very, very cautious and watchful about the real estate sector. But as I said earlier also, that the balance sheet position of the bank as on date is such, and the earnings position for the current financial year is such that the resilience and capability to absorb any unforeseen shock, it is very much there, built in.
So talking about...
Beena, introduce yourself if you can.
Beena from VC Circle. Sir, talking about the aviation sector, and we've heard that one account is in the news. Today is the last day for the bidding. How hopeful are you of getting bidders? And what was the reason that you did not infuse the 1,500 crore that was promised in the agreement?
Account is specific. We have said that I don't answer those questions. But as far as the hope is concerned, this world lives on the hope. So there is a hope till 6 p.m.
Have you got any bidders so far? I mean, could you throw some light on the interest?
Two unsolicited, and one is expected, as I said, that world lives on hope. So there is a hope till 6 p.m. Let us watch.
Sir, my name is Anku Goel from BTVI. So you've spoken about 100% provisioning for SR and 2 more accounts. Can you help us understand, with your provisioning number being 16,500 crore, could you help us know for IL&FS particularly what kind of provisioning has been done and what exposure?
What account? Which
IL&FS.
Again,
the additional provisioning done there, if you can help us.
IL&FS.
But on the, yeah, Arjit.
Yes, IL&FS, we have, the NPAs have all been recognized as per our RBI norms. And we have done 50% provisioning on all the holding companies. Okay, because that is our sense of if there is any recovery. So upfront we have done 50%. Last quarter also we had done. This quarter also we have done. So what?
Okay, that's State Bank of India talking about the numbers and the various accounts. The provisioning, 78% provisioning coverage post this quarter, which means a lot of provisioning is done upfront. I don't know if that plus the lower slippages, all of that leading to the stock inching up in the session today. It's trading at virtually the day's high, so really good going for State Bank of India. Gurmeet Chadha joins us as well, and of course a bunch of other guests will be joining in. Brijesh Singh of StockAxis and Rahul Mohindar will also be with us. But Gurmeet, you probably heard some bit of the commentary from the State Bank of India management as well. Just looking at the market mood though, is it a good idea to go out and make a purchase decision on State Bank of India, or would you just stay on the sidelines?
Neeraj, one can accumulate, but gradual accumulation would be good. I think what I liked was the commentary on the asset quality and the way the provisions have been done. I was also, if you see the GNPA and net NPA number, that's a good decline there. You spoke about the coverage being almost now 78-79%. They also made it clear in terms of the provisioning they have done on IL&FS, on the additional 1,200 odd on JET. So that was decent. Also, I think what I liked most about was the way they were talking about skill development for the manpower, taking the digital challenge. I know Bill Gates once famously said that banking is necessary, banks are not. And I think this is one factor which will be a big differentiator, which is the digital disruption. which banks are able to play the ball there and really shape and compete with the new fintechs. And there's Aditya Puri who's already talking about how the new competitors could be the Amazon and Flipkarts of the world. So that was very heartening. Although this is a more long-term thing. So I have been positive on SBI Bank, if you recollect our conversations, and I'll be an accumulator. Any dips are obviously welcome to accumulate. This is a market where the sentiment is a little weak because of liquidity, the D-Day being on 23rd. So if there is more correction, one should accumulate SBI.
Okay, that's a quick word on SBI. We heard the management talk, and those are some of Gurmeet's views. Let's bring in our technical experts as well, because we've seen the markets now closer to about 11,291. Brijesh Singh of StockAxis is joining us right now on the show. Brijesh, a quick take from you on the Nifty levels. This entire week has been plagued by days where we've seen, a close in the red. Today's session more volatile in nature, but looks like we're headed the same way. What's your take on what strategy one can adopt as we head into next week?
Good afternoon, Devina. See, roughly around 600 points of correction has been witnessed from our top of 11,856, and Nifty made a low of 11,255, and after that it's been hovering near the 11,300 mark. But what I've been witnessing from a shorter term time frame of the chart, that still the pain is been left. Since Nifty had broken the and trading below the Mohindar band, the daily Mohindar band, the lower end of that, which is giving a sign of still bearishness, followed by the 50-day simple moving average. It's been trading below that, and the correction which has come from the top, it's been increasing the volume. So the main part is the volume part. So what I'm been looking is that since the commentary of the SBI was been going on, Nifty was been trading somewhere around 11,300, and I was been looking if Nifty trades somewhere around 11,300 to 11,320 mark. Taking a Nifty spot value, one can take a sell side with a stop loss of 11,400 and play for the target of 11,100. Time frame to hold this strategy would be a 1 week. Most probably within a week also we can see Nifty might try to touch a level of 11,100 also.
Okay, let's also bring in Rahul Mohindar of Viratech Software. Hi Rahul, good afternoon to you. What sort of strategy would you deploy? Because every time Nifty is crossing or trading above the mark of 11,300, there's some supply which is coming in.
Undoubtedly earlier this week, when we broke down 11,550, I think that was the red flag. That was a level that was holding for several weeks. So that was a major breach. Now I hear a lot of retail that's saying, oh, we've dropped 700 from the top, we've dropped 800 Nifty from the top. Isn't it enough of carnage? Will we see a, but I tend to agree with, the technical analyst who just spoke that yes, we're still in a bear grip. We still haven't broken out into, any kind of upside level. Unless we get above 11,450, there's no point trying to assume that we'll have a pullback. So let's get above 11,450. And then estimate whether we'll get a pullback or not. For now, our targets are 11,180, which is the next support level on the Nifty. I'd also like to take this opportunity to remind people that when the market dropped from similar levels, back in September, October of 2018, there too we dropped from levels of, we had about a 1,700 point drop from 11,700 something to about 10,000 odd levels. So let's not think that 700 is too much or 800 is too much. Technically, we're still negative. Stay short with a 11,450 stop.
Important to keep that at the back of your mind. Now, Rahul, in light of that Nifty view then, what are the stock-specific recommendations that you would be making? Any trades that one can take?
Absolutely. I think from a stock-specific view, I've got one stock on my buy list which is still outperforming the market, which is HDFC Bank. Again, I think not just long-term, but even short-term, it's a good opportunity. So at current levels, I'd look at buying the stock for a target closer to 2,400, 2,390 to be precise. Keep a stop loss of 2,270. I have two sell calls, one on IOC for 144 target, keep a stop loss of 151 on this trade, and Mahindra, which seems to be challenging its previous lows of 618, 619. Particularly a close below that will not augur well. So 585 is my target there. with a stop loss of 635.
Brijesh, what about you? Your individual stock ideas?
I have a two sell call. One is from a tech. TCS is looking weak on hourly chart. The lower highs formation is giving a sell signal. So one can take a sell side with 2150 can be that level can be used as an initiative with the stop loss of 2190 and play for the target of 2060 or below that. Time frame to hold the counter would be 2 to 3 trading session. Another call from a sell side is from a metal pack. Hindalco is looking weak, somewhere around 197, 198. The stock has been quoting, so one can take a sell side at the present rate with a stop loss of 202 and play for the target of 190. Even the target can be extended to the level of 185. If I'm not mistaken, that is the previous swing low from where the stock has given a bounce back. And time frame to hold the strategy would be 2 to 3 trading session.
Okay. All right. Those are some stock ideas from Rahul as well as Brijesh. Time now to find out what has made it to Sharad Dubey's list of the Fab 4 stocks for the day. Sharad.
Hi Devina. So our list is earnings heavy today. The first up is Shankara Building Products, which is up almost 8%, and it's almost this has come in because of proper quarterly results. But I would like to talk about the management estimates, which has shown a 4.5 to 5% growth, and it has come in the guidance. Also, the debt numbers have improved, and also the balance sheet quality has improved. Up next, we are having Dilip Buildcon, which is hit in its upper circuit of 5% after it delivered a flattish kind of a Q4 results, but strong execution order was seen. And the net order book stands at around 21,000 odd crores. Up next, we are having Welspun Corp, which has gone up by almost 3% after the board considers to have a share buyback on May 14th. And last stock we are having is Oberoi Realty, which is up by 4% ahead of earnings, while its volumes trade at almost 2 times its 20-day moving average.
Okay, thanks a lot for that, Sharad. While we are looking at State Bank of India numbers and the flashes thereof, which is up 3%, important to mark 2 or 3 names. One of them is Shankara Building, which has gone up. We said that the earnings didn't look as bad as the optical numbers look like. Secondly, Bloomberg News is reporting Thyssenkrupp is proposing elevator operations IPO, abandoning the split. Now, this, of course, came some time back. I think the recent news bit also seems to suggest that this would mean effectively, guys, that if there was any uncertainty about whether they're creating a holding company and therefore the 2 entities could be put out there, etc., now that uncertainty is out completely because I presume by virtue of this move, which means that the JV is off. Now, Gurmeet, enough and more updates put out that this will be bad for Tata Steel because it hampers their deleveraging process, etc. The stock has already fallen 6%. How much more downside do you see to this? Because there was a bit of a build-up in Tata Steel believing that this was going to happen. Now that it's not happening, is it restricted to about 6, 7, 8%, or could there be more damage?
Looks like there could be a little more damage, and I think the bigger trigger for steel makers, which will probably come, is I think the key trigger would be if you could have another. So my base case is that a sharper fall could be bought into, but one has to wait for now. So if you see a bit of there's already a discussion in US on standing repo rate where you can actually swap your treasury for a portion of reserves, which could be a good way to free up capital and help Fed reduce its balance sheet, which is upwards of 4 trillion. Now, if you could have a more structural quantitative easing, then it could be a risk on for commodities and especially for steel. So, but you can buy into if there is a sharp fall, you can probably get maybe a little tactical here, provided and we hold it for some time, because my belief is that with the global growth slowing down, trade tariffs coming in, you will see more quantitative easing coming in, which will be a risk on for commodities space overall.
Okay, this is interesting, guys, and as we said, I think that statement from ThyssenKrupp which says that they expect the European Commission to block the proposed JV, so effectively off. Not surprised that Tata Steel is reacting the way it is, and as Darshan tells us, that ThyssenKrupp as a stock is doing actually well for itself, up about 10%. So That stock is doing okay. Tata Steel down about 6%. The initial notes that have come in the first cuts from brokerages also seem to suggest that this would put pressure on the stock. Not surprised that it's corrected about 6%. Is there a trade here though, Rahul Mohindar? A 6% drop already in Tata Steel. Could there be more?
Yeah, I'd be tempted to say that we probably head lower, 454, 455. That's the kind of target I've pegged it at. But the problem, Neeraj, in such a case is after the 6% drop, trying to enter at this point, the risk reward may not be very justified. So you might have, sudden sharp pullbacks to even levels like 510, 12. So, that can't be ruled out, and which is why I would say probably if it moves up closer to 510, I'd be a happier seller there.
Okay. That's Tata Steel for you. It's just down about 5.5% right now. But on the other hand, Thyssenkrupp is the stock which is doing far better. That's up about 8.5 to about 9% in trade in Frankfurt. So you're going to watch out for that stock as well. That is what the stock price is doing. And remember, this listing of the elevator unit was actually Plan B, anticipating a block by regulators. And that's probably what has come about when they're talking about the IPO of the elevator unit. That's Thyssenkrupp working on Plan B, and the stock price there up on your screen is 8.5% higher.
Yeah, in fact, I guess the deal was announced in September last year. Since then, the stock of Thyssenkrupp has collapsed nearly 50%. The concern was that the JV, in that JV, Tata Steel was trying to transfer majority, I think 75% of its debt. That was a concern, and probably that could be one of the reasons as well now that the JV is being blocked by ED. But we'll have to wait and watch. Clearly, some positive reaction seen because the stock of Thyssenkrupp since September to now is down almost 50%, but still some bit of recovery seen after that. And as Devina highlighted, the Bloomberg article is mentioning this was the Plan B, listing the elevator business. All right, that's about State Bank of India, but I think it's time for us to take a check as to what the dealing rooms are recommending in trade on this Friday. Yatin Mota and Darshan Mehta join us with their channel checks. Good afternoon, guys. Yatin, over to you first.
Navneet, of course, SBI and PSU stocks are in focus. Darshan will discuss that. But Tata Steel, you guys have already spoken about this. Domestic funds are said to be sellers as far as this metal name is concerned. A lot of, volume there. Post the Reuters report, and now Thyssenkrupp finally confirming this. Almost 3.5 crore shares traded as far as Tata Steel is concerned, as a lot of institutional activity is said to be happening according to dealing rooms. Also NCC, that is one stock which is doing well in trade, almost 5% up for that one. And on the basis of F&O trends, dealers are recommending a buy today, sell tomorrow kind of a strategy. Remember, IRB Infra is also up, so NCC, IRB Infra, all of these infra names are quite active in trade today. And finally, Kajaria Ceramics, that is also one company which came out with earnings today. Post that, we saw strong pullback from the day's low, and Kajaria also is one stock wherein dealers are indicating there is a lot of short covering for the trade today. But Darshan has a few more stocks to talk about.
Yeah, so SBI probably is pretty much trading at the day's high. It's done well for itself. Dealers believe that the internals were rather strong and the momentum will continue for the counter. Bharat Forge is at a fresh 52-week low, so there is negative traction that's happening on the counter, and dealers believe that some of the domestic funds are active seller in the counter, and Kotak Bank will be in focus. There's a buzz of a potential block deal that can happen in the bank over the next few days, so that's something that we are keeping our eyes on.
Watch out for all of these names. Thanks a lot for that, Darshan, as well as Yatin, putting that into perspective. Bharat Forge, interesting. I think almost everything related to global trade would have been under stress. So Bharat Forge, Motherson Sumi, Tata Motors and the likes have been under pressure throughout the last few weeks, and in today's session as well. At least Bharat Forge is down. Don't quite know what Motherson Sumi is doing. If you can pull that stock up on the screen as well and just see what that is doing. Under pressure, 127. This would be close to the 52-week lows, and Tata Steel, Tata Motors too, from those 229, 230 levels has come off quite rapidly the last few days. Currently at about 185, marginally in the red. So do watch out for those names. Voltas, though, interestingly, has had a bit of a recovery in the session today. Intraday did reasonably okay for itself. Bounced back 1.5% higher after starting off at least 6% lower. Gurmeet, the cooling solution companies, I presume, have had a good April and May. So what's done in the past is done. Are they good to buy, or is the consumption slowdown going to weigh in on them too? And if they are good to buy, what would you buy from a Voltas, Havells, Symphony, and the others which are listed?
So, Neeraj, last check by us in terms of dealers and the big retailers is that there is a big pickup both in AC and refrigerator after the delayed start to the summer season. Also, this particular segment, Neeraj, doesn't get too much impacted by the credit tightness, unlike auto or some of the other names, because there are a lot of banks which have entered this space. There are a lot of fintech companies which have got into this, other than your Bajaj Finance of the world. So there's a good pickup. I think what we have been getting is that in terms of the AC sales, it's largely between Samsung, Voltas, and Blue Star. So one could look at both. If you see the Blue Star performance, I think last 1 year, because of the underperformance of Voltas, now the P levels are roughly same at about 30 times. Voltas, because of the fact that it has a higher market share of around 23-24%, could be a preferred pick here. So you can look at that. Havells, we have had discussion. I think it's a larger home improvement play rather than just the white goods play, because they are 4 product lines. One is your switches, second is your wiring, then you have lighting, and then finally you have the consumer goods space where they are making some presence felt through Lloyd. So my top picks in this space would be Voltas and Blue Star, and Havells and Bajaj Electricals in terms of playing the white goods space. I see a good pickup. It's supposed to be a good quarter with this Skymet also forecasting a subnormal monsoon. You could also have an extended summers this time around, and as I said, doesn't get too much impacted by the credit tightness, unlike other consumer discretionary space.
Okay, the extended winter, Gurmeet, definitely didn't help these companies in the quarter gone by. Let's see how the subsequent quarters will pan out. But just pull up Titan Company. That stock is at days high now. It shot up in last few minutes of trade, up almost 3% around the levels of 1135. Brijesh, on the charts around these levels, would you take a bet?
Navneet, as a disclosure, we have recommended to our client from a lower level right now at 1135. If someone wants to look for a fresh buying, can be done. Present rate or any tips around 1130. Your stop loss would be 1115 around, and the target which I am looking on the higher side where the supply would be coming would be 1155 to 1160 band. If that thing has been crossed, then the next level to watch would be 1172.
Okay, that's Titan Company up almost 3% in trade. Gurmeet, Asian Paints numbers were pretty weak. You had the gross margins as well as the EBITDA margins contracting for the quarter gone by, but it still remains market leader, though the commentary was not that encouraging. What would you do with this one?
So I will accumulate on dips. This is one kind of a stock which is buy and forget bucket for me. I think if you break up the numbers, the decorative paints didn't do badly. It's the auto OEM space which didn't do well. Also, if you see their home improvement, which is right now a very small part of the overall business, that the top line grew 21%. So I think that the transition they are trying to make to be a complete home improvement player rather than just the paints player would pay dividends in the long run. Good company, great dividend payout ratio, high ROCE. We have seen a trend of decorative paints being typically 1.5 times GDP. We are seeing an uptrading happening. There is a significant demand in the interiors, in the rural parts, although the metros have seen a bit of a slowdown. There's a conversion from lime wash to cements. To me, such declines in good quality names like Asian Paints or maybe an HUL should be used to accumulate, because you should not take a 6-month, 12-month view on these counters. These are great. It has a 60% plus market share. This entire sector right now on the organized space is some 38,000 crores. My sense is the sector itself will expand the kind of focus we have on housing.
Okay, that's the view coming in on Asian Paints. Just 10 minutes to go for markets to close. Let's get you some closing strategies from our technical experts. Rahul, I'm going to come to you first for Monday's trade. Any BTST or any STBT?
I think more on the sell side, I probably look at Maruti to start with. I think we'll probably end up closer to 6,500 tomorrow rather on Monday. So I look at a sell with a stop loss above 6,710. targets of about 65.20 here.
Brijesh, what about you?
See, Navneet, Reliance is looking weak. And if you remember Wednesday when we were talking in FNO segment, I recommended Reliance selling at 13.30 around for the target of 12.85. Now, right now, the stock has been quoting at 12.49. Still is looking weak. If it gives closing below 12.60, chances are that it has been heading for a level of 1200. So not for a BT, STBT, but for a day or two, if someone wants to go for a sell set, one can look out to sell at the present rate of 1250 around, with keeping a strict stop loss of 1270 and look for the target of 1200 or 1205.
Rahul, Mohindar, the SL Group stocks, ZTV and Dish TV, second day in a trot, at going up and ending the day at the day's highs. If you were long, would you carry home the long positions?
It's a matter of perspective. If you're really looking at a long-term or a medium-term trader's perspective, an absolute no. I think we have to understand that 390 to 395 is the critical resistance. But if your vision is, okay, I'm interested in the next 5 to 8%, maybe yes, that may happen. But really, do I expect follow-through beyond 390, 395? No. Which is why I would say it's better to square up in a slightly negative market environment than to take a chance on this.
What about Dish TV?
I think are very similar. We are negative even from that medium-term to long-term perspective. So I would use any of these rallies up as opportunities to really move out. I would not be taking home a buy trade on this from a trading angle.
But the market's just come off a bit, I must say. Just pull up the intraday of the Nifty Bank as well. It was up 0.9%. It's now up just about 0.3%. So a bit of a pull back, and banks are leading the charge downwards. There are others like HCL Tech, Tata Steel, etc. But it's essentially banks, Yes Bank, IndusInd, etc., which are all pulling the markets lower. Bajaj Finance is down about 1.6% too. But the Bank Nifty, I reckon, the principal culprit in the last few minutes of trade. Just wondering, any last-minute trades, Brijesh, on the Nifty Bank?
See, if someone wants to go for a sell side in Bank Nifty, I'm taking a spot value of 2982. Present rate can be used for a sell purpose with a stop loss of 29,100, and target or a support we can say is 28,400 to 28,450. If it gives closing below that, then another say 400 points of correction can be seen.
Gurmeet, before we thank you, you track this space very closely. What would you do with a Maruti? Long-term multiples 21 times, currently trading at about 20 times FY21 earnings, with an assumption that the earnings come out. At these levels, what Rahul Mohindar said, that the stock is likely to go lower. If it does nudge that 6,500 odd mark, would you be a long-term buyer? Oops, I think we've lost Gurmeet. Never mind. Just about getting ready to start wrapping up the markets. Rahul Mohindar, if I can take that question, which I asked Brijesh to you as well. Got a view on the Nifty Bank. What about the 2 or 3 names which have come off in the last few minutes? Yes Bank, IndusInd Bank, etc., which are all looking wobbly and amongst the top losers. Would you have a short call on any of these? You have a long call on HDFC. Would you have a short call on the others?
Oh, definitely Yes Bank. It's not like I'm broadly bullish on banking. I think basically HDFC Bank is a kind of a standout name there. I'm still negative on a Yes Bank. You can expect downward surprises here, and I use the word surprises at this point even, because really if Yes Bank starts breaking levels of 160 odd, the next supports only come in a good 15 to 20 rupees lower. So from a percentile point of view, one could still expect a carnage here. Whatever you do, keep a 169 rupees stop loss on Yes Bank when shorting the stock.
All right. Just one last question, Gurmeet. Anything in particular, any stock that you are closely watching?
So there been a couple of them. One obviously is ICICI Bank. My sense is that it's something which the profits can go up 3-4x from what they are right now. Could be a little more depending upon the NCLT recovery. Clear trend in terms of net interest income going up. Clear focus on the retail lending. I think they will probably get to, they'll be able to reduce credit costs. They should be able to get to RA of return on, increase their ROA and get to an ROA of more than 15%. So very, very, very positive there. The other one is some of the multiplex operators. I think you could see it's been a great year, both in terms of net box office collections, the F&B revenues being up, and including the advertisement revenue being up. We've seen some concern with Maharashtra government stepping in on the F&B bit, but I think that also seems to have allayed. Our penetration levels are very, very low. We are like 8 screen per million compared to any country, which is, the China is about 30. And I think this concern of OTT versus cinema, I think is also overstated. I think it's like those food aggregators versus restaurant. I think cinema is an experience. The other is more delivery. So I think both will coexist. So that's some of the and there's a lot of consolidation now. There's movement happening from single screen to multiplex. So both PVR and Inox look good from a long-term perspective.
Gurmeet, thanks so much for taking the time out and being with us today. Really appreciate your time. And let's start wrapping up the markets. Well, 0.5% lower. We're not ending at the highs of the day. And it sums up what the week has been like. Days and days of pain. 4 days on a trot now. Actually longer that we've been in the red. So not turning out to be a happy week. The mid caps and the small caps will come up on your screen, and they have ended marginally higher, so the market breadth might be positive, and we'll talk about that too. Let me first quickly talk about the large caps. The market just about to shut shop. What's done well? Z, yet another day of gains, so up 3.5%. Titan ending at the day's highs 2.5%. Bharti up 2.5%. State Bank of India, the upfront provisioning and the lower slippages may be aiding the stock. Indiabulls Housing Finance a couple of percentage points higher. ICICI Bank 0.5%, HDFC 0.5%. What's not done well? Tata Steel-Thyssenkrupp saying that the JV might not go through. In all probability, we'll see a blockage and therefore 6% lower. HCL Tech, surprise reaction to my mind, down about 4%. Banks, by and large, Yes Bank, IndusInd are also correcting. And down there, TCS amongst the heavyweights also correcting quite strongly. And speaking of broader markets, just very quickly look at the advanced decline ratio before I hand it over to Navneet for what's happening across the bucket of the mid caps and the small caps. Look at the market breadth here. The lines have converged, so we're ending the day with almost flat or even Stevens on the market breadth. But Navneet, how does the mid cap space look like?
Well, it's a divided house. I've got gainers as well as losers. So let me start off with a couple of result reaction. Kajaria Ceramics went into its earnings with, on a weakish note, it was down 9% ahead of the earnings for the week. But after the earnings came about, as you can see, the stock did recover. Also, you saw a lot of OI build-up coming up for this counter. So there's a lot of traders' interest going in, 586 towards the closing. PNB Housing was the other one, which reacted positively after the numbers came in. NI for the quarter was up 17% and the bottom line growth was nearly 51%. IRB Infra, that stock saw good volumes on the cash side today. In fact, that's ending with gains of about 7.5%. United Spirits was the other one, which saw some buying momentum in today's trading session. That's closing the day with gains of 2%. And Biocon, which has been weak in the recent past. In fact, the counter touched 52-week low yesterday. From thereabouts, it's rebounded and finally closing at 537. Canara Bank was the other one, which came out with the numbers a while back. Asset quality improved, and that's been the trend, I guess, for most of the PSU banks. We saw that in the case of State Bank of India, 3% higher for Canara Bank. On the losing side, you had something like Aztec Life Sciences. That lost momentum. There was selling pressure seen, 10% lower for this one. PVR came out with the numbers. The bottom line for this quarter was down, and you saw that reaction coming in. There was some selling after the numbers came in, 2.5% lower. And South Indian Bank was the other one where selling pressure was witnessed, 8% lower here. And also MGL, which reacted to the numbers margin miss, and Jefferies maintained their underperformed rating here, 892 towards the closing. C8 was the other one where selling pressure continued right from yesterday, 2.5% closing around the day's low mark. And also Delta Corp, that crashed, I guess, in last 15 to 20 minutes of trade. That stock is closing with cuts of, towards the end, again, it recovered a bit, but still closing with cuts of 5.5%. And Venky's, which had to come out with its numbers today, saw some selling pressure ahead of that. Venky's closing around 6% lower at levels of 1810. Davina.
Surprising that the mid caps and small caps have actually managed to close the day in the green, while the large cap index, the Nifty 50, loses another 45 points. So that takes the fall now over the last 7 days or the last 8 days of the month to about 500 odd points on the Nifty. Nifty Bank ended the day slightly positive. You've got a weekly negative close coming there. Every single day of this week has been a negative close for the Nifty. Let's bring up the Nifty 50 components and see how the weekly performance has been before we talk about the daily contributors as well. And this is what you've got. Nifty this week itself has been down closer to 4%. Key culprits, Tata Motors down 11%. Reliance Industries 10% heavyweight on the index. I think a contribution of about 120, 130 odd points to this 500-point drop on the Nifty. Z Entertainment, the big drop that comes in, brings it down below 400. Vedanta, JSW Steel and the banks looking weak. What's probably held ground is a TCS that's ended the week flat, but still not a good show. And Infosys is down about 1%.
The broader markets too were under pressure throughout the week. In fact, we've seen that in case of the market breadth. So let's just pull up the weekly movers when it comes to the broader market. So PNP Housing, that was your top gainer. I think that reacted to its earnings as well, 13% higher for the week. Edelweiss rebounded, that was up 12%. Tata Chemicals was the other one on back of numbers, I believe. That counter rose 6%. And Hexaware, this has been an outperformer, by the way, throughout the market. Throughout this week, markets were weak, but there was some meager gains seen for Hexaware on daily basis. And on the losing side, Dewan Housing, this remains your high beta counter, lower 18%. Reliance Capital was down almost 14%. And something like Escorts, that too fell about 10%. And Jindal Steel and Power, there was a lot of shorting seen for this counter on the future side. And also something like Sun Pharma and IDBI Bank, all these counters lost between 8 to 10%.
I wonder why Dish TV has not made the list after we've seen the performance.
After that massive fall, I think there was some recovery seen in the last few days.
So this is what you got in the small cap, and just quick highlights here. So Jet Airways about 10% higher, and then on the losing side, you've got an Indiabulls Real Estate. Real estate as a pocket has looked weak. There's a dire week. So Sobar, Indiabulls Real Estate has looked weak. Fertilizers, Chambal Fertilizers 8%. So all in all, it was a well-rounded sell-off, if you have to say. Taking a look at quickly the turnover and how it's shaped up in terms of the volume picture in today's session. While the rest of the week has been high on volumes, today's session has actually been very low compared to the last few days that we've been seeing. So just about 6.7 lakh crores on the NSE F&O. Cash markets, though, at par about 31,000.
Yep, and towards the end, I guess the volatility also spiked up, where in the last three sessions, markets was falling. VIX also fell along those lines. But today, India VIX is once again closed above the mark of 26 with around 3.3, and the market breadth, as we've already highlighted, was in favor of declines.
All right, that's about the close for the week for the index, and not a very happy note. Let's quickly, find out from our technical analysts how they'll position themselves going forward into trade next week. Rahul, let's start off with your comments first.
I think first of all, we've got to look at the Nifty. 11,450 was a number I spoke about. I still maintain that over the next week, let us wait for 11,450 to be crossed, particularly on a closing basis if you're looking at buying the market. The stocks I would definitely avoid within the heavyweights, stock like TCS, Reliance, Tata Motors, even if I'd add to the list banking, some of the names like Yes Bank, etc. These are all what look like negative pockets to me. I won't jump into selling Tata Steel, as I mentioned, clearly from a risk-reward angle. But what could show some kind of intraday kind of moves or good moves could be some of the banking names like an Axis or an ICICI. You could have some sporadic up moves next week, and I would call them more of corrective up moves more than anything else. So I still think we're not out of the woods. Major event coming up with that election result. So I think it's going to be slightly more range-bound. 11,450 on the top, 11,180 at the bottom. I think only once we get a breakout of these two levels could we get a decisive trend.
All right, Brijesh, what about you?
Devina, since we've been aware that 11,550 on the downside for 11,850 on the higher side was in the range, and after that, the range has been broken and Nifty has been trading down and it's been making a lows now. Right now, what I've been witnessing is that till Nifty not able to give closing above 11,400, we would be finding a selling pressure. Even the heavyweights like Reliance or Tata Motors, that what Rahul has been mentioning, the charts are looking weak. as a PSU, if we talk about in banking, SBI result was there, but it's been trading in the range of 290 on a downside, followed by 320 on the higher side. If anyhow this range breaks, then we might see a bank Nifty also coming in the pressure, and the Nifty might try to touch a level of 11,100. So what for the next week I've been looking is that chances are that Nifty might break the recent swing low of 11,250, and we might try to touch a level of 11,100 on a downside.
All right, we'll leave it at that, gentlemen. Rahul as well as Brijesh, thank you so very much for joining us this afternoon with your thoughts and your views. And on that note, it's a goodbye from Navneet, Neeraj, myself and the entire team that's put this show together. Coming up next is the Market Wrap.